Hi, everybody. It's FIBO Group, and you are watching to the Market Watch review. The major equity markets in Asia-Pacific were down 1 to 2%. Stoxx 600 is off for its fifth consecutive session, and the second session with more than 1% drop. Futures in the U.S. point to a gap-less open of the US Indices today. The greenback remains firm. It reached a new 24-year record against the yen and a 2-year new high against sterling. It held the $1,700 level in gold, but it trades heavily and is on track to lose another session. October WTI fell below $88.50 on Wednesday, bringing it to almost $9 a barrel in its 3-day decline. This is despite OPEC Plus warning that there will be a shortage next year and a switch from a surplus. Asian Pacific market. The bright spots of today in the region were Japan's strong-than-expected Q2 capex and corporate profit. They were too old to have any impact. Japan reported separately that its August manufacturing PMI dropped to 51.5 from 52.1. This was slightly higher than the initial estimate. In the local session, the dollar rose to new 24-year highs in relation to the yen at JPY 139.70. Australia's August manufacturing PMI was revised to 53.8 from 54.5. The Australian dollar fell to $0.6800 below its July 18th low. Market of Europe. Poor EMU CPI data may have been the final straw to support a 75 BP increase by the ECB next Wednesday. From the initial estimate of 49.7 and 49.8 respectively, the final Eurozone manufacturing PMI fell to 49.6. Some observers believe that the mild contraction could be encouraging for the ECB. The range of the euro was limited to yesterday. The nationwide UK House Price Index rose 0.8% in August, more than the 0.1% increase expected. Despite the weak data and contraction in GDP second quarter, the Bank of England warns of a possible recession. Sterling sold for $1.17 Monday and was slightly lower today at 1.16. Market of America. Market rightly shrugged off a weak ADP private sector estimate. The new methodology revealed a 132,000 increase of private sector employment. A busy economic calendar awaits the U.S. ahead of tomorrow's jobs report. Canada's disappointing current account numbers for the second quarter warned of disappointment. The GDP was 3.3%, rather than the median projection of 4.4%. In the current risk-off environment, the U.S. dollar has risen against the Canadian dollar for the third consecutive session. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.